Part A of this question paper is completed. Now we are going to start Part B. Part B has two options. That is, option 1 is analysis of financial statement. Then let us start the question. State whether the following transaction will result in inflow, outflow or no flow of cash while preparing cash flow statement. From the choices given, you have to identify whether it is inflow of cash, whether it is outflow of cash or whether there is no flow of cash. First item, decrease in outstanding employees benefit by rupees 3,000. Decrease in outstanding employees benefit by rupees 3,000. Do you know, is it outflow or inflow? It is outflow. Then second one, increase in current investment by rupees 6,000. Increase in current investment by rupees 6,000. Here we can't see any flow of cash. There is no outflow and inflow of cash. That is why we have to write this one answer as no flow. See solution. First one outflow, second one no flow. Then next question. From the following details provided by Humud Limited, prepare comparative statement of profit and loss for the year ended 31st March 2021. Here you have to prepare a comparative statement. See, from the following details provided by Humud Limited, prepare comparative statement of profit and loss for the year ended 31st March 2021. Here, what are the items or what are the information given? Particulars 31st March 2020, this is previous year. 31st March 2021, this is current year. Then first item, revenue from operation 30 lakh, 35 lakh. Second item, other income 3 lakh, 4 lakh 50,000. Then cost of material consumed 20 lakh, 23 lakh. Then other expenses 1 lakh, 1 lakh 20,000. Then tax 40%, 40%. Then here, while preparing comparative income statement, you have to find out, that is absolute change, either increase or decrease. Then how much is the percentage change? These are the two columns we have to insert while preparing the solution. Okay, then how to find out is there is an increase or decrease? Compared to previous year, current year amount is more, we can say it is an increase. Then compared to previous current year amount is less, we can say it is decrease. Then let us see the solution. Then comparative statement or comparative income statement format. First item, income from revenue from operation. Second item, other income. Third item, total income, that is 1 plus 2. Then fourth item, expenses, total expenses. Then fifth item, profit before tax, PBT, that is 3 minus 4. Then next one, less tax, that is fifth item. Then we will get last item, PAT, that is profit after tax. This is the format of income statement. Then let us see the solution. See solution, particulars, note number. This is 31st March 2020, that is previous year. 31st March 2021, this is current year. Then absolute change. These two columns we have to insert it. Absolute change means in bracket you can see increase or decrease. Then percentage change. In bracket you can see increase or decrease. This is the percentage. So we have to given these columns, we can given the name, this column A, this column B, this column C. How to find out C? B minus A. This is C. The last column D. How to find out D? C divided by A into 100. This is the way we have to find out D. So first item, revenue from operation. These two years amount are given. That is, let us see the question. That is 30 lakh and 35 lakh. See, 30 lakh and 35 lakh. Then these two column it is given in the question. Then C, how to find out absolute change, increase or decrease? C means B minus A. This is the current amount. This is the previous amount. Compared to current amount, then we have to find out the difference between current year amount and previous year amount. So 35 lakh minus 30 lakh, how much? 5 lakh. That is the difference. That is the way we have to find out third column. That is B minus A. B B means 35 lakh, then 30 lakh, that is 5 lakh. Then last column, find out D. How to find out D? This is C. C divided by A into 100. So, that is C means 5 lakh divided by A. A how much? 30 lakh into 100. So, we will get 16.67. Like that way we will get each amount. Same procedure we have to follow. Then take the next item, other income. It is given in the question. First year 3 lakh, second year 4 lakh 50,000. So, find out the difference between 4 lakh 50,000 and 3 lakh. So, how much is the difference? 1 lakh 50,000. Then how to identify, is it increase or decrease? Compared to previous year, current year amount is more means it is increase, current year amount is less means it is decrease. Then 1,50,000 we got it. Then we have to find out D, the column D. How to find out D? That is C divided by A into 100. So second case 1,50,000 divided by 3 lakh, we will get 50, into 100 we will get 50%. Then total revenue. Then A plus B. Total revenue means A plus B. That is 1 plus 2. This is 1, this is 2. So, we got 33 lakh, then 35,000 plus 4 lakh 50,000, 39 lakh 50,000, then 5 lakh plus 1 lakh 50,000, 6 lakh 50,000. Then we have to find out here that is D. D means C divided by A into 100. Okay. Then next, fourth item. This is expense. We can give 1, this is 1. This is 2, this is 3. Then fourth item, expenses. Okay, first one, cost of material consumed, 20 lakh, 23 lakh, find the difference, that is 3 lakh, then 3 lakh divided by 20 lakh, 15%. Then next one, other expenses, 1 lakh, 1,20,000, 1,20,000 minus 1,20,000, then 20,000 divided by 1 lakh, 20%. Then total expenses. 20 lakh plus 1 lakh 21 lakh, 23 lakh plus 1 lakh 20,000, 24 lakh 20,000, 3 lakh plus 20,000, 3 lakh 20,000, then 3 lakh 20,000 divided by 21 lakh into 115.24. Okay, total expenses we got it. Then next step, that is, this is fourth item. Then profit before tax. How to find out profit before tax? 3 minus 4. 3 minus 4. What is it? Which item we have recorded in 3? That is total revenue. That is third item is total revenue. So 3 minus 4. 4 means total expenses. That is total expenses 21 lakh. Total revenue is 33 lakh. So 33 lakh minus 21 lakh we got, that is fifth item 12 lakh. Here 39 lakh 50,000 minus 24 lakh 20,000 is equal to 15 lakh 30,000. Then 6 lakh 50,000 minus 3 lakh 20,000 is equal to 3 lakh 30,000. Then 3 lakh 30,000 divided by 12 lakh is equal to 27.5. Then this is the fourth item. Have you understand this step? First one, revenue from operation. Second one, other income. Then third one, total income. That is 1 plus 2. Revenue from operation plus other income, total revenue. Then fourth item, expenses we have to, individual expense we have to record it. Then take the total expenses, fourth item. Then fifth item means 3 minus 4. That is profit before tax. Then sixth item, less tax. Tax rate given in the question is 40%. This is profit before tax. So 40% of 12 lakh. First case, 40% of 12 lakh is 4 lakh 80,000. Here 40% of 15 lakh 30,000 is 6 lakh 12,000. Okay, have you understand how that tax percentage we have to calculate it? That is 40% of profit before tax. First case profit before tax is 12 lakh. Second case 15 lakh 30,000. Then 40% of 12 lakh is 4 lakh 80,000. Then 40 percentage of 15 lakh 30,000 is 6 lakh 12,000. Then here also we have to find out 40%. Then 1 lakh 32,000 divided by 4 lakh 8,000 into 100 is 27.50. Then we have to minus this one. We will get profit after tax. This is the way we have to prepare comparative income statement. Have you understand? Then from 12,000 we have to minus 4 lakh 8,000, we got it 7 lakh 20,000. Here 15 lakh 30,000 we have to minus 6 lakh 12,000, we got it 9 lakh 18,000. Here 3 lakh 30,000 we have to minus 1 lakh 32,000, 1 lakh 98,000. Here also we have to find out this column divided by this into 100. Okay, then next question. Okay, shall we do next problem? Then from the following balance sheet of Vinayak Limited as at 31st March 2021, prepare a common size balance sheet. Okay, let us see the common size balance sheet. We have to prepare a common size balance sheet. Let us see the question. Particulars, note number 31st March 2021, 31st March 2020. Previous year, current year. Then first item, equity and liability. Equity and liability, first item, shareholders fund. Under shareholders fund, we have share capital 30 lakh 50,000, 20 lakh. Then reserves and surplus 2 lakh 80,000 and 6 lakh. Then second item, current liabilities. Under current liabilities, we have trade payable 6 lakh 70,000 and 4 lakh. Then asset side total, liability side total, equity and liability side total 40 lakh and 30 lakh. Then second one, assets. Asset under first heading, non-current asset. First one, fixed asset. Tangible asset 16 lakh, 12 lakh. Intangible asset 2 lakh, 3 lakh. Then under current asset, inventory 8 lakh, 3 lakh. Trade receivable 12 lakh, 10 lakh. Then cash and cash equivalents 2 lakh and 2 lakh. Then total, since it is a balance sheet, both liability side and asset side total, we have same balance. Then let us see how to prepare common size balance sheet. Okay, let us see. See, first item, in the same order we have to keep. Then here, 2 more additions we have to done. That is percentage of balance sheet total. We have to subdivide into 2 columns, 31st March 2020 and 31st March 2021. Then how to find out? Here, in the case of common size balance sheet or common size statement, we have taken a common base for individual item. In the case of liability side, total liability is taken as the common liability in order to find out, in order to evaluate individual liability. Likewise, in the case of assets, individual asset, we have to take total asset in order to evaluate individual asset. This is the way we have to find out the values, increase or decrease or percentage increase. Whereas in the case of comparative statement, we have to find out either increase or decrease. Here, increase or decrease compared to previous year and current year. Here, that is not the way. That is, here little bit difference is there. Here we have to take a common base. In the case of liability side, total liability. Whereas in the case of asset side, total asset. Let us see. Then you will get a clear idea about it. See, equity and liability shareholders fund, first share capital. How much? 20 lakh, 30 lakh, 50,000. Here, these 2-year figures are given. Then 2-year percentage also we find out. These 2 columns we have to find out. Then let me allow to explain how to find out that total. In the case of first case, here first item, that is share capital. Then total liability how much? 30 lakh. So find out first case. This is the 20 lakh. Then that item we have to divide it by 30 lakh. That is the liability side total into 100. So we will get, how much is the percentage? 66.67. See how we got that value, that is 20 lakh. This is share capital amount in 2020. This amount we have to divide it by liability side total, that is 30 lakh. 20 lakh divided by 30 lakh into 100, we got 66.67. Like that way, in 2021 also we have to find out. Then 2021, how much is the share capital amount? How much is the share capital amount? 3,50,000. Okay, 3,50,000. How much is the total? Liability side total in 2021? 40 lakh. Into 100. So, we got 76.25. Like that way, each individual liability we have to divide it by liability side total. Then take in the case of next item, reserves and surplus. 6 lakh. 6 lakh divided by 30 lakh into 100, we will get 20%. Then 2,80,000 divided by 40 lakh, we will get 7%. Then current liability, we have only one current liability, that is 4 lakh. 4 lakh divided by 30 lakh into 100, 13.33. Next one, 6,70,000 divided by 40 lakh into 100, 16.75. This is the way all the individual liability we have to find out the percentage of balance sheet total. Okay, then coming to the asset side. The same procedure we have to follow. Individual asset we have to divide by total asset. See, first case, non-current asset, under non-current asset, first item fixed asset. Fixed asset first one, tangible asset 12 lakh. See, first item 12 lakh divided by, how much is the total? 30 lakh into 100. So, you will get 40%. Then next case also 16 lakh. Divided by 40 lakh into 100, we will get 40%. Okay, like that each item we have to find out. Then next item, intangible as 3 lakh divided by 30 lakh into 100, 2 lakh divided by 40 lakh into 100. Then current asset 3 lakh divided by 30 lakh, 8 lakh divided by 40 lakh, we will get the same percentage. Then inventory 10 lakh divided by 30 lakh, 12 lakh divided by 40 lakh. Then here cash and cash equivalent 2 lakh divided by 30 lakh, here also 2 lakh divided by 40 lakh, 6.67 and 5% we have to find. Okay, like that way we have to prepare common size statement. Have you understand how to prepare common size statement and comparative income statement? Okay, then let us see the next question. Cash flow statement. Then let us see. First try to understand the question first. Okay, what is the question? On the basis of the information given by Aradhana Limited, prepare cash flow statement for the year ending 31st March 2021. What is the question? What do you have to do? That is, on the basis of the information given by Aradhana Limited, prepare cash flow statement for the year ending 31st March 2021. Then, first one, equity and liability under shareholders fund, then share capital is given. Then 31st March 2020 and 31st March 2021. Then 2 years you can see. Then share capital for the first year 5 lakh and share capital for the second year 7 lakh 30,000. Then second one, reserves and surplus 3 lakh 50,000, then 3 lakh 70,000. Then under the heading non-current liability, you can see long time borrowing, first year 4 lakh, then second year 2 lakh. Then under current liability, you can see trade payable 3 lakh 60,000 and 4 lakh 60,000. Then short term provision 3 lakh 25,000 and 3 lakh 20,000. Then total 19 lakh 35,000, 20 lakh 80,000. These are about liability side. Then coming to the asset side, then first one, non-current asset. Under non-current asset, fixed asset, you can see tangible asset. First year 4 lakh 50,000, second year 5 lakh. Then next one, tangible asset. First year 3 lakh 10,000 and second year 3 lakh 2,000. Then loans and advances, you can see 4 lakh and 4 lakh 30,000. Then under current asset, inventory 2 lakh 70,000 and 2 lakh 90,000. Then trade receivable 2 lakh 40,000 and 2 lakh 60,000. Then cash and cash equivalent, first year 2 lakh 65,000, then 2 lakh 98,000. Total same since it is a balance sheet. Then next one, notes to account. Then notes to account, you can see reserves and surplus, that is statement of profit and loss. First year 3 lakh 50,000, second year 3 lakh 70,000. Then long time borrowing, you can see 10% debentures. First year 4 lakh, second year 2 lakh. Then trade payable, under trade payable you can see creditors 2 lakh 40,000, then 2 lakh 60,000. Bills payable 1 lakh 20,000 and 2 lakh. Then under short term provision, you can see provision for tax, that is first year 3 lakh 25,000 and second year 3 lakh 20,000. Then tangible fixed asset, you can see machinery 5 lakh 50,000 and 6 lakh 60,000. Then in addition to, you can see less provision for depreciation 1 lakh and 1 lakh 60,000. Then you can see intangible fixed asset, that is patent right 3 lakh 10,000 and 3 lakh 2,000. Then under additional information, you can see debentures were redeemed on 1st April 2020. When debentures are redeemed on 1st April 2020. Then tax paid during the year 2 lakh 80,000. These are the information given. Then from this information, you have to prepare cash flow statement. Dear student, before going to prepare cash flow statement, you have an idea about what are the content in cash flow statement. Let us see. Then you have to prepare cash flow statement under 3 headings. First one, cash flow from operating activity. Second one, cash flow from investing activity. And third one, cash flow from financing activity. Okay. Okay. Before going to prepare cash flow statement, you have to identify under the cash flow statement what are the content. First one, cash flow from operating activity. Then in this case, we have to find out cash used or cash generated from operating activity. Okay. Then second one, cash flow from investing activity. In the case of investing activity, it is concerned with purchase and sale of fixed assets or investment made in fixed asset. Then cash flow from financing activity. It is connected with issue of shares and debentures or redemption of shares and debentures. Then let us see the solution, how the cash flow statement is prepared. Then first one, cash flow from operating activity. Okay, let us see the solution first. Then first one, cash flow from operating activity. Cash flow from operating activity. Under cash flow from operating activity, first item, net profit before tax and extraordinary item. Net profit before tax and extraordinary item. How much is the value? 2,95,000. Then let us see how that value we got. See, net profit as per statement of profit and loss account 20,000. How you understand? How that 20,000 got it? See, reserves and surplus statement of profit and loss account, you can see first year 3,50,000 and second year 3,70,000. That difference, that is first year 3,50,000 and second year 3,70,000. That difference, that is difference between 3,70,000 minus 3,50,000. This is 20,000. This is the first item that working note. See, that is net profit as per statement of profit and loss account. That means the difference between reserves and surplus. First year 3,50,000 and second year 3,70,000. So the difference between 3,70,000 and 3,50,000, that is 20,000. Then next, one more item. We want the net profit before interest and tax. Then we add tax paid during the year. Then in this case, opening tax balance is given. Then closing tax balance is given. In addition, tax paid during the year also given in the question. See, provision for tax. Opening 3,25,000. Then closing balance 3,20,000. In addition, in the addition information, tax paid during the year is 2,80,000. These are the information given regarding the tax. So, we have to prepare a tax account. See the solution. Provision for tax account. Since it is a liability or since it is a provision, first, that is opening balance, we have to enter on the credit side. So, how to enter it? By balance B bar D, 3,25,000. This is the opening balance. Then just before we have seen that is closing balance. How much is the closing balance of provision? That is 3,20,000. Since it is a provision, opening balance we have to show on the credit side. How to enter? Balance B bar D, 3,25,000. Then closing balance, it is recorded on the debit side. How to show it? That is to balance C bar D, that is 3,20,000. Then tax paid during the year. How much is the tax paid during the year? That is 2,80,000. Then what is the journal entry? Provision for tax account debted to bank. So how it will be recorded in the provision for tax account? Since provision for tax account is given debit, it is recorded on the debit side of the provision for tax account. So to bank, the provision or the tax paid during the year are recorded. How you understand? That is opening balance we have to record it on the credit side. Then closing balance we have to show on the debit side. Then tax paid during the year, that is the journal entries, provision for tax account debtor to bank. So it will be recorded on the debit side. Then what we have to do? After that we have to balance both the side of an account. So we have to balance this side total is 6 lakh. This side we have only one item, that is opening balance. How much it is? 3,25,000. Then find out the difference between both this side we got, that is 2,75,000. This is the balancing figure BF. This is the balancing figure BF. This balance we have to take, that is C. This is 2,75,000. So now net profit before tax, how much we got it? 2,95,000. This is the first item in the cash flow statement under operating activity. How you understand how this 20,000 got it? That is the difference between opening reserves and surplus and closing reserves and surplus, that is 20,000. Then tax paid during the year, that is this is the balancing figure. So this is the first item in the cash flow statement, that is cash flow from operating activity, net profit before tax and extraordinary item 2,95,000. Clear now? Then next we have to do, along with that one, what we have to do? That is adjustment for non-cash and non-operating items. Adjustment for non-cash and non-operating items. Then you have to check whether there is a depreciation or whether there is amortization of goodwill or intangible asset or whether there is interest. All these activities is there. You have to check it. So we can see depreciation of the year. How you understand how this 60,000 got it? Then coming to the notes to account. See, this is the notes to account. Here you can see machinery. Machinery first year 5,50,000, 6,60,000. Okay, then under the machinery you can see provision for depreciation. Opening balance 1 lakh, closing balance how much? 1,60,000. That difference, that is 1 lakh minus 1,60,000 or 1,60,000. Closing balance 1,60,000. Opening balance 1 lakh. If we have draw an account, we have to enter this provision. This is on credit side, this is on debit side. So we will get a balance of 60,000. So we have to record that one. That is the depreciation. That is depreciation of the year 60,000. That is 1,60,000 minus 1,00,000. That is 60,000. This is depreciation paid during the year. Have you understand now? Then you have to check whether there is any amortization of intangible asset. In the notes to account, we can see one item is there. See, intangible fixed. We have only one intangible asset. What is that? Patent. Then patent right, first year 3,10,000. Second year how much it is? 3,02,000. Compared to first year, last year amount is less means that it is amortized or it is written off. To take the difference between 3,10,000 and 3,02,000. How much it is? 3,10,000 minus 3,02,000. How much is the difference? The difference is 8,000. This we can take as amortization of patent or intangible asset. That item we have to add it. This is second item, amortization of patent 8,000. Have you understand how that 60,000 got it? Then how this 8,000 got it? Then interest on debentures. How this 20,000 got it? Coming to the, see, 10% debentures. What is that 10%? It is the interest provided on debentures. So here, first year 4 lakh, second year 2 lakh. Then one debentures were redeemed on 1st April 2020. One adjustment is there. So this 2 lakh, current year, this 2 lakh, amount is this 2 lakh, this 2 lakh, 10% is 20,000. That is the interest paid during the year. 2 lakh, current year amount you have to take on. 2 lakh, 10% means 10 divided by 100. So the amount is 20,000. This is the interest on debentures, 20,000. So 3 items, that is depreciation of the year 60,000, then amortization of patent 8,000, then interest on debentures 20,000, then take the total of 60,000 plus 8,000 plus 20,000. How much it is? 88,000. Then this 88,000 we have to add it along with this net profit before tax. That is 2,95,000 plus 88,000. So now how much is the balance? 3,83,000. Then this is operating profit before working capital changes. This is operating profit before working capital changes. So before working capital changes we got it, operating profit. Then what is the next step? Then along with that one, what is working capital? Do you have any idea about working capital? Working capital means current asset minus current liability. It is working capital. So along with this one, we have to add decrease in current asset and increase in current liability. What we have to add? Decrease in current asset and increase in current liability. We have space limit, that is why I wrote CA. CA means current asset, CL means current liability. Then along with this operating profit before working capital changes, we have to add decrease in current asset and increase in current liability. Let me check whether there is a decrease in current asset. Let us see the question. These are the current asset. Then how to find out whether there is a decrease compared to previous year? Current year amount is more means it is increase. Compared to previous year, current year amount is less means it is decrease. Then let me check. We have 3 current asset. Out of this, cash and cash equivalent we didn't take here. Then we have to consider these 2 current asset. Inventory. Then first year how much it is? 2,70,000. Second year, how much it is? 2,90,000. Is it increase or decrease? It is increase. Last year amount is more. How much is the increase? Take the difference between 2,90,000 and 2,70,000. How much it is? 20,000. It is increase. Increase we have to minus. Now, if there is any decrease means we have to add it. So, we have to deduct this item. Okay. Then second item, trade receivable. Take in the case of trade receivable, first year 2,40,000, second year 2,60,000. This also increase. So in this problem, we don't have decrease in current asset. Then coming to the liabilities, current liability. What are the current liabilities given in the question? See, under trade payable, you can see creditors. Increase in current liability is there, we have to add it. Creditors, first year 2,40,000, second year how much? 2,60,000. So how much is the increase? 20,000. Then bills payable, first year 1,20,000, second year 2 lakh. So how much is the increase? 80,000. Difference between 2 lakh and 1,20,000, 80,000. Here 2,40,000 and 2,60,000, 20,000. So see, operating profit before working capital changes. Along with that one, we have to add. What are the items we have to add? Decrease in current asset. I already told you, in our problem, we don't have decrease in current asset. Our current asset we have increase. Okay, so that item we don't have. Then increase in current liability is there. Then increase in creditors, 20,000. Just before I explained how this 20,000 got it. Then increase in bills payable, that is 1,20,000 and 2 lakh. That difference 80,000. Then how much it is? 20,000 and 80,000. How much it is? 1 lakh. This total is 1 lakh. Then along with this 1 lakh, 2 items we have to minus. That is increase in inventory. That is increase in current asset. How much? 20,000. Then increase in trade receivable, how much it is? 20,000. This 40,000 we have to deduct from this total. That is 20,000 plus 80,000, how much? 1 lakh. From this 1 lakh, we have to minus this 20,000. That is 20,000 plus 20,000, that 40,000 we have to minus. That is less increase in inventory, 20,000, increase in trade payable, 20,000. So total 40,000. This total 1 lakh. 1 lakh minus 40,000, how much it is? 60,000. This 60,000 we have to add it along with this 3,83,000. So how much is the total now? Cash generated from operation, how much it is? 4,43,000. Along with that one, tax paid during the year we have to minus. Tax paid during the year is 2,80,000. It is given in the additional information. See, tax paid during the year 2,80,000. This 2,80,000 we have to deduct it from 4,43,000. So we got 1,63,000. This is cash flow from operating activity, first category. I already explained to you, cash flow statement is prepared under 3 heads. Cash from operating activity, cash from investing activity, cash from financing activity. That is A plus B plus C. Then along with this A plus B plus C, we have to add opening cash balance. Then we will get closing cash balance. Then our problem is correct. So we got one item or first category, that is cash from operating activity, 1,63,000. How you understand? Then next one, cash flow from investing activity. While doing investing activity, you have to find out whether fixed asset bought or fixed asset sold. Then how to find out fixed asset bought or fixed asset sold? How to find out this one? Compared to previous year, current year amount is more, it is treated as purchase. Compared to previous year, current year amount is less, it is taken as sale of fixed asset. Okay, then second category, that is, this is B category, cash flow from investing activity. Purchase of machinery 1,10,000 is there. Then let us coming back to the question. See, machinery. This is the machinery amount. First year 5,50,000. Second year how much it is? 6,60,000. What is the difference? 6,60,000. See, 6,60,000 minus 5,50,000, that is 1,10,000. Since it is cash payment, we have to put in bracket or it is the application of fund. So, cash flow from investing activity, we have to check, you have to check whether there is fixed asset bought or sold. Bought means that compared to previous year, current year amount is more means it is treated as purchase. Then compared to previous year, current year amount is less means it is treated as sale. So, purchase of machinery 1,10,000. Then investment in long time loans and advances also we can see 30,000. Coming to this, see, that is long time loans and advances. You can see long time loans and advances. First year 4 lakh, second year 4,30,000. That is 4,30,000 minus 4 lakh. How much is the difference? 30,000. So, we have two cash applications under investing activity. That is, there is no sale of fixed asset. So, purchase of machinery 1,10,000. Do you know why it is put in bracket? Since it is an application fund, we have to minus this figure. Then investment in long time loans and advances 30,000. Then total, that is 1,40,000. This is minus figure. So, this is the next category. Cash use in investing activity. Then cash from operating activity we got it. Then cash from investing activity also we got it. Then one more category, that is cash flow from financing activity. Then while calculating cash flow from financing activity, you have to identify whether there is issue of shares or debentures. At the same time, whether there is redemption of shares or debentures. Issue means that it is an inflow of cash. Then redemption means that it is an outflow of cash. Then let me check whether there is issue or redemption. Then issue of equity shares 2,30,000 is. How to identify this one? Compared to current year, previous year amount is less, it is treated as issue. See, let us coming back to the question. Under shareholders fund, you can see share capital. First year 5 lakh, second year 7,30,000. That difference compared to previous year, current year amount is more, it is treated as issue. Issue 7,30,000 minus 5 lakh. That is how much it is? 2,30,000. See, this is 2,30,000. It is inflow of cash. Then next one, payment of interest. We already taken this one into operating activity. How much is the interest payment? That is 20,000. That is 2 lakh. 10% is 20,000. That payment of interest that we have to put in bracket since it is an application. Then redemption of debentures is there. How you understand? How this redemption of debentures 2 lakh got it? It is payment. See, here notes to account you can see under the heading long time borrowing 10% debentures. First year 4 lakh, second year 2 lakh. Compared to previous year, current year amount is less. So, it is taken as redemption. So, 4 lakh minus 2 lakh. that is 2 lakh is redemption. That difference we have to take as redemption. If just reverse the amount means that it is taken as issue. Here compared to previous year, current year amount is less. So it is treated as redemption. If compared to previous year, current year amount is more means it is taken as issue. So cash flow under cash flow from financing activity, you have to check whether there is issue of shares and debentures and redemption of shares and debentures. Then in addition, whether there is any payment, interest payment, any other payment is there, you have to note that one. So we have equity shares, that is issue 2,30,000, then payment of interest 20,000, then redemption of debentures 2 lakh. Then take the total. Here minus figure, how much it is? How much is the total of minus figure? 2 lakh plus 2 lakh 20,000. How much it is? 2 lakh 20,000. Then we have one plus figure, that is inflow. We have inflow 2 lakh 30,000. These two items are outflow. Then take the difference between inflow and outflow. Inflow is more, so the difference between 2 lakh 20,000 and 2 lakh 30,000, that is how much it is? 10,000. This item we have to treat it as, that is net cash flow from this from financing activity. How you understand? 3 categories. First one, operating activity. Second one, investing activity. And third one, financing activity. Then fourth category, net increase in cash and cash equivalents. How to find out net increase in cash and cash equivalent? That is A plus B plus C. That is net increase in cash and cash equivalent. What is A? Cash from operating activity. What is B? Cash from investing activity. What is C? Cash from financing activity. So, let me check. A means 1,63,000. This is inflow. Plus investing activity B, 1,40,000. This is outflow. This is minus figure. Plus, this is plus figure. That is C, that is plus 10,000. So, first you have to add all the plus figures. 1,63,000 plus 10,000. How much it is? 1,73,000. From 1,73,000, this is minus figure now. 1,40,000 we have to minus. 1,40,000 we have to minus. So we got 33,000. This is net increase in cash and cash equivalents, that is 33,000. How you understand? A plus B plus C. Okay, 1,63,000. This is minus figure. So we have to add first these two total, and from that total we have to minus 1,40,000. So we got 33,000. Dear students, along with that one, if you add opening cash balance, you will get closing cash balance, means your problem is correct. Let me check. So we got 33,000. Then how much is the opening cash balance? Cash and cash equivalents. Take. See, cash and cash equivalents. Opening how much? This is the opening cash and cash equivalent. 2,65,000. We got that balance 33,000. This 33,000 plus 2,65,000. This is the opening cash balance now. Then while adding that total, you have to add opening cash balance if you will get closing cash balance. How much is the closing cash balance? 2,98,000. We got now. See, our problem is correct. This is the opening cash balance. This is the closing cash balance. See, opening cash balance, we have to add 2,65,000 along with the 33,000. So we got cash and cash equivalents at the end, that is 2,98,000. This is cash flow statement. Okay, then cash flow statement. Under cash flow statement, you have to find out operating activity, cash from operating activity, cash from investing activity, then cash from financing activity. A plus B plus C. Along with that total, you have to add opening cash balance. If you will get closing cash balance, your problem is correct. Have you understand?